young, smart, wealthy, really excited consumer base. And one of the things we're going to be rolling out next year that I'm really excited about is merchant offers, where retailers and other types of firms that want to advertise and promote their products to this incredibly high value segment of customers that use the BlockFi card. They'll be able to do that through offering incentives where, right now the base rate is 1.5% Bitcoin back on every transaction. In your first 90 days, you earn 3.5%. But we'll have some really exciting stuff coming out early next year, where at select merchants or for select products, you'll get even higher rates than that.
Here's the thing, though. You live in New York. I live in New York. We can't actually get this card right now. It's not available in New York.
Yeah, so the credit card is available in 49 out of the 50 states in the U.S. New York is the only one where it's not currently available. Incentives.
What are the conversations you're having with regulators to make it available to New Yorkers? I imagine that's an audience, that's a customer base you want to have.
Yeah, absolutely. I can't comment too much on the ongoing dialogue that we're having at BlockFi with a number of regulators, in New York, included in that. But I think we're optimistic that the card and other products on our platform will be available in New York sometime next year.
Okay. So first half, second half, what do you think?
50-50. 50-50 chance.
Okay.
Could be either one.
I'm really interested in what you said about the crypto curious who come to BlockFi through the rewards credit card. Are you seeing the credit card as kind of like a, for lack of a better term, a gateway drug to get people into the BlockFi platform and get people into cryptocurrency who aren't familiar with it or don't use other platforms?
Yeah, absolutely. I mean, we think of our kind of position in the market when compared to most of the other large cryptocurrency companies, which are exchanges. We think of ourselves as a bit more of a wealth management type of platform, where we want to be offering a suite of products to folks that are easy to use, that are really valuable for them to use. And each product can be the hook and the first kind of acquisition of a customer in and of itself. The credit card is just the newest iteration of that. But yes, absolutely. The behavior that we typically see is someone will start with the credit card or start with our interest account product, and then over time they'll also be trading or potentially taking out a loan. And we really want to build that high level of engagement with our clients, and we hope that they'll see a lot of value out of multiple products that we already have and products that we're launching in the future.
In conversations that I had with you and your team ahead of this conversation today, I learned that about 5% of your revenue comes from the credit card right now. How do you want that to grow?
I think payments as a category. So the credit card is our first product in the payments category. We expect that to be 10 to 15% of revenue by the end of next year, and close to 30% of our overall revenue by the end of next year. By the end of next year, we'll likely also have a debit card available and more payment options, especially outside the U.S. Today for our U.S. clients, they can send money to and from their bank account and their BlockFi account. But for our clients outside the U.S., which is about 30% of our client base, they're still reliant on cryptocurrency payment rails only. So they can send us Bitcoin, Ethereum, stable coins, but they can't send us money from their traditional bank account yet. And so payments is a big growth area for us, both in terms of products and features.
Well, that was Zach Prince, the founder and CEO at BlockFi from the Bloomberg Financial Innovation Summit. You can check out that entire interview by going to BloombergLive.com. We talked a lot about regulation as well, Katie, because the company has been in the crosshairs of regulators, not for its credit card product, although New York State it has been, but for its interest-bearing crypto account.
Yeah, and obviously that is a hot topic with regulators. I mean, it's not just BlockFi under scrutiny right now. You have Coinbase too, really coming into the focus of regulators. Glad you spent a lot of time there because, I mean, that's what everyone wants to know in the crypto community and the crypto curious. What's going to happen? It seems like the U.S. has really stepped up their just focus on the industry as a whole.
Well, it has been remarkable to hear how BlockFi has been able to capture the zeitgeist and capture the moment, especially over the last couple of years. The company's on track this year for $475 million in gross revenue. The average spend on their credit card, $5,000 a month. Prince told me that people pay off those credit cards. Mm-hmm. They don't carry a balance.
Not profitable yet, though, right?
Not profitable yet.
Getting there.
Getting there.
All right.
Yeah. It's worth between $3 and $4 billion as of the last funding round.
Wow.
It's a company started like less than 5 years ago.
I mean, crypto companies, they're so hot right now.
I know they are. We're going to have more crypto later in the show with Michael Sonnenschein at Grayscale. In the meantime, you're listening to Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Bloomberg Business Week, Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studio. And Dave Wilson has just entered the studio. That means it's time for the stock of the day, the chart of the day, and of course, the song of the day. Katie, you and I this week are
Disappoint again.
Okay, there we go. And Dave is nodding like it's going to happen. All right, we'll get to studying. Well, Charlie Pellet gives us the latest as we get close to the market close. Just 28 minutes to go.
You got it. Nothing like a winning attitude for the song of the day, right? You guys are throwing up your hands already. Here's what's going on. We have got the Dow, the S&P, NASDAQ all advancing. 28 minutes to go ahead of that closing bell. We've got a rally in companies that stand to benefit the most from an economic rebound, driving stocks higher. Solid jobs data and encouraging results from Pfizer's COVID pill study that helped push stocks higher. Treasury 10-year yield sinking below 1.5%. Let's begin there because right now I'm looking at the 10-year of 1.43%, 10-year up 25-30 seconds, 4%, 18.17 the ounce, and West Texas Intermediate crude surging 3.5% right now, 81.55 a barrel on this Friday. NASDAQ 100 index up 0.1%, broad-based rally today. Russell 2000 up by 1.3%. Pfizer making big news. Stock up now by 10.6%. Pfizer says its COVID-19 pill did reduce hospitalizations and deaths in high-risk patients by 89%, a result that has the potential to upend how the disease caused by the coronavirus is treated and to alter the course of the pandemic. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
Here's the big problem with antiviral treatments is they have to be given early after symptom onset. And in this study, everybody got the drug within 5 days of symptoms. And there were even better results if you started taking the drug within 3 days of symptoms. Translate that into the real world, and it becomes a bit more problematic. You have to come up with symptoms. You have to go get a COVID-19 test. You have to get the results from those tests, and then go get a prescription.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. I mentioned Pfizer up now by 10.6%. Fascinating reaction, though, elsewhere among some of the vaccine stocks. Look at BioNTech. The ADRs down now by 20.9%. AstraZeneca's ADRs, they are down by 1.2%. Moderna out of Cambridge plunging 17.8%. J&J Johnson & Johnson down by 0.8%. But again, big news out of Pfizer on its COVID pill study. Shares rallying now by 10.6%. Recapping equities at records, S&P up 19. Bring on the song of the day. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. This is Bloomberg. I'm hearing like Elvis Costello's style.
You're in the right era.
Okay.
I give you credit for that.
Okay.
Screaming, crying. That's what I got. That's it.
You're on the right side of town. That sounds like Elvis Costello to me. Who is it?
But it's not. Like I say, you're close though.
Yeah.
Okay, here's a hint. Live Aid organizer.
Huh.
That's what I thought. Okay.
Okay.
Boomtown Rats with Bob Geldof singing. Yes.
Yeah,
he was
there
the
was
organizer.
A snowball's chance that I would have gotten that.
Absolutely. And the song is Rat Trap, and it's from the album called A Tonic for the Troops, which also happens to be the headline of today's chart. Hence the connection.
Good connection.
Thank you. In any case, it's all about the Russell 2000 index. You know, I saw this chart yesterday from Chris Verone over Strategas, looking at the Russell after it set a record on Wednesday. Now, one thing that people who watch charts like Verone want to see is that it's not just the index that's doing well, It's the stocks in the index that are doing well. And there are a number of ways you can measure that. And in the chart he put together, in which I replicated, it was a matter of looking at the percentage of companies in the Russell setting 20-day highs, 4 weeks, call it what you will. So relatively short time period. And when you got that record on Wednesday, you were at 40%. And I went back to the beginning of 2018, a little longer period than Verone looked at, and I saw the average in terms of the percentage of stocks at new highs was 13%. So in other words, it was triple the average at a time when the index was setting a record. And so he saw that as a positive, not only for, the Russell itself, but, if you think about it from a broader economic perspective, right? Smaller companies tend to do well when the economy is doing well in relative terms in both cases. So that, kind of explains why, he chose to focus on this and what he took away from the index in terms of a signal here. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Some really interesting spikes higher, Dave, even though the average has been 13% since 2018. In the early parts of 2020, when you saw the Russell 2000, more than 60% of stocks hitting highs.
And what was happening then? We were getting the start of the current bull market. So, there were definitely times when you had above average readings. So you were getting broad strength, not just the pickup from the March lows of last year.
Yeah, it's amazing seeing that, because one of the spikes where it was above 60% was just at the end of April in 2020, just a month after the low of March, right?
There you go.
Wow. Okay, well, give us your stock of the day.
That would be Grid Dynamics. This technology consultant, they provide other types of services. The ticker is GDYN. And they were out late yesterday with results and forecasts, and everything was great relative to analysts' average estimates in a Bloomberg survey, whether you're talking about third quarter revenue or their preferred earnings gauge, EBITDA, earnings before interest, taxes, depreciation, and amortization. Similar story for the fourth quarter, and they raised their full year revenue estimates. So when you put that all together, you're talking about a stock that set a record, and at the moment, at least, is headed for its biggest gain since the company went public in 2018. It's up about 26% on the day.
Yeah, and in this year, up a mere 193%.
That's all.
That's all. Dave Wilson, stocks editor at Bloomberg News. Dave, have yourself a wonderful weekend. Hopefully better luck to Katie and me next week when it comes to the song of the day.
Oh, Katie, you get to do this again?
Not next week, Tim.
Okay, well, soon. Better luck to me.
Later this month.
Later this month.
All right.
All right, let's get a check the latest world and national news with Denise Pellegrini in the 1130 newsroom here in New York. Hey, Denise.
Hey there, Tim. We're watching events on Capitol Hill because we may be about to see some developments with President Biden's Build Back Better spending plan. Word is the House may begin an hour of debate on the rule for the measure, and that could kick off in just a few minutes. Friends, family, dignitaries eulogizing former Secretary of State and retired military Army General Colin Powell in Washington earlier today, and former Deputy Secretary of State Richard Armitage, who served under Powell, speaking at the service at the National Cathedral.
Eleanor Roosevelt wrote, "If at the end one can say, this man used to the limit the powers that God granted him. He was worthy of love and respect."
And that was former Deputy Secretary of State Richard Armitage speaking about the late Colin Powell. Another possible treatment for those who do catch coronavirus. Pfizer reporting strong results for its COVID-19 pill. And we get more on exactly what it is from Bloomberg's Ann Cates.
Pfizer says the pill reduced hospitalizations and deaths in high-risk patients by 89%. That has the potential to upend how the disease caused by the coronavirus is treated and alter the course of the pandemic. It could be taken at home at the first sign of symptoms. Pfizer plans to submit its findings to U.S. U.S. regulatory authorities for emergency approval as soon as possible. The results mean there are now 2 promising candidates for treating COVID-19 patients early. In Washington, Ann Cates, Bloomberg Radio.
And Texas, Florida, Missouri, and more than 20 other states with Republican attorneys general are now suing to block the Biden administration's controversial COVID vaccine rule. And that rule requires large companies to mandate that their workers get vaccinated against COVID. Global News 24 hours a day. I'm Denise Pellegrini, and this is Bloomberg.
Thank you so much for that update, Denise Pellegrini, Tim Stanovic, and Katie Greifeld in the Bloomberg Interactive Broker Studio in New York. And Katie, we've got a rat problem.
We do have a rat problem, especially in New York City. Health inspections finding evidence of rat activity and cases of a disease spread via, you'll love this, rat urine, all up amid the pandemic, as if we didn't have enough to deal with.
This this got a read spike. It's a New York Times story by Ed Shanahan, and it actually goes on. There's some great data in here, but anecdotally, I've noticed that this is absolutely the case. I think I told Carol about this on air, but when we were talking about outdoor dining, a few months ago, I was walking from my dentist appointment to the subway by some people, it was nice weather, eating outside, and I saw a bunch of rats scurrying through the restaurant because they was outdoor seating.
Oh.
And I thought to myself, this outdoor seating thing, like it's great, but also great for rats.
Great for rats. I feel like I see them more in the subway now than I did before, like in the actual tracks. Which
Yeah, just don't
I don't
look.
actually
That's the trick,
mind.
Katie.
No,
Just
I don't
don't
mind.
look.
It's like being at the zoo. But there are some great numbers in this story, which is cool that the data is collected on this. There have been more than 21,000 rat sightings reported to 311 this year, compared to 15,000 in the same period in 2019. That number was 12,000 in 2014. So there's a lot of rats.
These
out
are
there.
just rat sightings that
Just
have been
rats.
reported.
People who actually take the time to
Yeah.
report that they saw a rat.
How many times have you called 311 as the result
I've-
of seeing a rat?
I don't think I've ever called 311 ever.
So I've not called 311 to report rats, and I've seen many rats. So take those numbers with a huge grain of salt. There's sort of this perfect storm, though, the New York Times writes about. The scenario behind the surge is like this, as Ed Shanahan writes. A few months after the city shut down, construction drives rats into the open had been halted, returned with gusto. Outdoor dining expanded as restaurants. Inspectors who look for evidence of rats, they were assigned elsewhere. Mass vaccination sites, etc. Check out the story. It's on the terminal and at the New York Times website. You're listening to Bloomberg Radio. This is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. We have got the Dow, the S&P, NASDAQ all pushing higher. We're looking at records right now, a rally in companies that do stand to benefit the most from an economic rebound, driving stocks higher. We had that solid jobs report this morning. Also, encouraging results from Pfizer's COVID-19 pill study. Pfizer shares surging now by 10.5%. Right to the numbers with the S&P up 18, higher by 0.4%. NASDAQ well off session highs, but still up 31 at a record, up 0.2%. The Dow rallying 215 points, up 0.6%. NASDAQ 100 index up 0.1%. Russell 2000 up 1.4%. 10-year yield 1.44% right now on the 10-year. Spot gold up 1.5%, 18.18 the ounce, and West Texas Intermediate crude is up 3.5%, 81.53 a barrel on WTI. After earnings, Peloton plunging 35.8%, Expedia rallying 15.4%, Airbnb up 13.1%, Shake Shack shares, they're up by 16.6%. Recapping records across the board, big day for stocks, S&P up 16 on this Jobs Friday, up 0.3. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Just 10.5 minutes away from the close of the equity markets on this Friday, November 5th. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers Studios. Very pleased now to be joined by a familiar voice to our audience, Ryan Dietrich, Chief Market Strategist at LPL Financial, joining us once again on the phone from Charlotte, North Carolina. Ryan, how are you?
Tim, we're making new highs once again. Yeah. So I guess you'd say I'm in pretty good mood. I mean, this is, Tim, the 7th new all-time high in a row, assuming we close there, which is looking like we will. This is the second time this year we've had a 7-day all-time high win streak. I just was looking. These years might sound familiar to the bulls. 1955, 64, 65, 95, and 97 are the only other years in history that have seen two separate 7-day win streaks that all were at all-time highs. This is just truly...
Wait, let me make sure I get this right. Okay, so if we finish higher today,
right,
we will see the two 7-day win streaks, which has only happened 8 other times since 1950?
Well, 7-day win streaks have all closed at all-time highs.
Oh,
7-day win streak in a row of new highs, and it happened earlier this year. So this is the second time we've done that. So it's just, there's so many ways we can break it down, right? But it's just fascinating when you see it like that. Also, this will be the 16th winning day. The past 18, you got to go back to May 1990. The last time we saw that, 1971 before that. So. Just a lot of ways of saying this is, I was on with you guys a month ago and said, everybody's talking about, remember the rich dad, poor dad guy was giving all the warnings about October. We said, we just don't see it. There's a lot of strength there. Maybe earnings coming better than expected. It was better than even we thought, but my, oh my, it's, we are getting stretched, but it's been a great run, clearly, the last, several weeks here.
Well, Ryan, it's been a great run. I mean, those are some amazing size and scopes that you just laid out for us. I can see Tim writing them down. But where do we go from here? Because, you mentioned October seasonally. It wasn't supposed to be as good as it was. November tends to be pretty good for the stock market. But if seasonals didn't hold in October, why should they in November?
Yeah, Katie, the interesting thing about October, when you look at an odd number year like we had, October is actually really good. What happens in an odd number year? Well, nothing really, because even number years, you have an election. So we were saying maybe pre-election jitter. So a little strength in October made sense, but you're right, up 6%, like almost 7%. That's a little stretch, but it is what it is. November is the strongest month of the year, and when you're up 20% for the year heading into the usually strong November, it's actually never been lower, going back to World War II, higher 8 out of 8 times. So let's put a bow on this. I mean, we are stretched extremely. But what's neat about it those are large caps. I mean, small caps, everyone's bullish small caps now, but, small caps went nowhere for 9 months and just broke out this week. There's a lot of other areas that have truly, mid caps just broke out last week. So there's some areas that are saying, hey, we're going to take the baton for a while. Maybe small caps take a large caps take a well-deserved break. But some of these other areas are going to keep it going, and that's the lifeblood of a major secular bull market, which we believe we're in. Different groups get to take their turn, and we think small cap could take the turn for a while.
So the question, Ryan, is what does this all tell you about where we're going to go for the rest of the year?
Yeah, I mean, the rest of the year still looks strong. I mean, again, we're extremely overstretched, yes. But again, we might have a little correction, a little pullback, but again, November, December usually strong. There's still the tailwinds of the Fed and the fiscal policy, and it just still looks good. And let's be honest. Okay, we're talking about the market. Let's talk about the economy for a second. Historically, when you have new highs in transports and small caps and financials, I mean, look at financials. Financials are flat today, yet the 10-year yield's down significantly. I think that's a good thing. I think that's encouraging. I mean, these are cyclical things that are leading us, and that's the market's way of leading the economy in our view. So 6 to 9 months from now, we should have probably a lot stronger economy than people think. We all saw that 2% GDP print in the third quarter. That was bad, but that was also backward looking. Stock market's saying economy is probably on better footing than most people think here in the next 6 to 9 months.
Okay, I'm glad you brought up the bond market because it's quite a move that we're seeing. I mean, the 10-year yield down 8 basis points today. That's following pretty much an 8 basis point decline yesterday as well. What's going on? I mean, I'm somewhat surprised to see this on a week where the Fed officially announced that, yes, we are tapering.
Oh, you're right, and it's not just the U.S. I'm just looking at all the different 10-year yields around the globe, and they're all tanking. And I think it's a unique situation. I think it does have something to do with the central bank policy. In the past, we've seen some, I use the word squirrely, some squirrely moves after central bank decisions, Fed interest rate decisions. But it is somewhat perplexing with the drop in the yields we're talking about, but just yield curves in general. And it could just be, the market is sniffing out, okay, well, tapering is here. We still need to readjust to what that might mean. But to us, we're still focusing more on those earnings, which we understand a little bit more. Those earnings were spectacular, as you guys have talked about it. Over 80% of companies came in way above expectations. Again, start of the year, people thought S&P 500 earnings would be 165. It's looking like it's going to be like 205, maybe a little more. That's like 25% higher. S&P is up about 25% for the year. So kind of interesting how that works.
Hey, I'm wondering, Ryan, about, and you and Katie were talking about this a little bit, but what we learned from the jobs report today. I know earnings is what you see driving it, but do you get a better idea for the way that the economy is recovering based on the numbers in the revision?
Yeah, I mean, the revision was nice. We all kind of assumed that after last month, or that really low number, we assumed it'd be revised higher. But I think it just makes sense in the whole idea that finally open it up, a little bit more. People are getting back to work, and then things are fairly strong. And with some of the benefits that officially ended over a month ago, approximately, people are getting back in. And then we fully anticipate the next 2 months or so, we should see some really big numbers again. Maybe we don't quite hit 1 million in a month, but, up over 500,000 in the next couple of months makes a lot of sense to us. And we're still, I think it's about 4.5 million jobs away still from where we were pre-pandemic. So there's still some hiring that is needed to even get back pre-pandemic.
This is something we've been talking about all day. Do you think those jobs ever come back?
We do. Eventually they do. But you know what? The last recession, how long it took? 7 years after the financial crisis recession for those jobs to come back. So it's one thing we've been saying at the LPL Research to our nearly 20,000 advisors. Don't expect these jobs to come back right away. The stock market comes back, earnings come back, GDP comes back, but jobs historically do take a while to come back, and they will eventually. It took 7 years last time, and it might not take that long this time, but several years could just be the playbook.
And Ryan, it's interesting to see, bringing it back to the bond market, I live there, interesting to see cyclicals break apart from yields today. I mean, obviously the Pfizer pill news really boosting some of those cyclical sectors and the Russell 2000, but how long can that dynamic last? Do yields have to rise, or is this cyclical boost that we're seeing today going to fade?
No, we would say the cyclical boost is not going to fade. I mean, you mentioned, just the economy in general. We think it's getting stronger. That helps cyclicals. The Pfizer news helps cyclicals. I see small caps once again up over 2%. Feels like almost every day this week they've been up over 2%. I know they haven't been, but it feels like that. And let's not forget taxes, right? A year ago, right now, after the election, most of us would have assumed we'd have significantly higher taxes this time a year ago or a year later. And here we are. We know more spending's coming, but, likely we're going to have much lower taxes than we expected. And who does that benefit more than anybody? The small caps. Small caps do not like higher taxes, and now taxes are, lower than what the market anticipated just this time 2 months ago, let's be honest. And that's another tailwind for those cyclical areas, specifically small caps.
Ryan Dietrich, Chief Market Strategist at LPL Financial. He joins us on the phone from Charlotte, North Carolina. Ryan, always great to chat with you. Thank you so much for taking the time. Well, we are just a couple minutes away from the market close on this Friday afternoon. The Dow higher by close to 0.6%. The S&P 500 off its highs earlier in the day, but still going to close at a record. It's looking like now higher by more than 0.3%. The Nasdaq up by more than 33 points to the upside of more than 0.2%. Coming up next, it's Beyond the Bell, our cross-platform coverage of the market close with our colleagues from Bloomberg Television. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast team. Tim Stenovic and Katie Greifeld in for Carol Masser here on this day. Looking at a market here, not a whole lot to scoff at all. You're talking about record highs pretty much across the board. And you take a look at the S&P 500 right now, Tim. 9 of the top 10 stocks on a percentage basis right now are directly tied to that reopening trade.
Yeah, you really took the words right out of my mouth. I mean, I think when we think of crucial moments of the day, when we learned about the efficacy of that Pfizer treatment earlier in the day, I mean, look, you have Expedia, you have Live Nation, you have Pfizer, Royal Caribbean, Carnival, Delta Airlines, all leading the way on the S&P 500, pulling it higher, saying, hey, wait a second, we are turning a corner on this pandemic.
Also crushing it in that reopening trade are the small caps. If I look at the Russell 2000 right now, closing 1.4% higher, that is quite a move. And it's interesting that that's out of sync with the fact that we saw 10-year Treasury yields fall 8 basis points today. Usually you see those two rise in tandem, but that reopening bid obviously overwhelming what's going on in the bond market right
Exciting as we look towards the weekend, we look towards Monday, and finally my family can come over and visit to the US. The border's open, but notably also, tell you what's also on a tear, volumes up 40% on the S&P 500 today versus your usual.
And it's so interesting. We've cited this research before. When January through October has had a solid year, and on the S&P it has, that most likely continues in November and December. I know for our radio audience on TV, we've been talking a lot about a lot of those calls for 4,800 by year end that actually are looking pretty smart.
Yeah, and we should just point out, too, at least on a sector basis, your leader on the day is actually energy stocks, believe it or not. Consumer discretionary leading on the week here. We're getting the closing numbers here. The Dow Jones Industrial Average up 214 points, or about 0.6%, firmly above 36,000. The S&P 500, which at one point traded above 4,700, going to close right around 46.97 and change as we wait for these numbers to settle. That's good enough for about a 0.4% gain. The Nasdaq Composite up 0.2%, up about 31 points. In the Russell 2000, as Katie was just talking about here, 2437, up about 1.4% here on the day. Another record high, second record high this week for the Russell 2000, of course, after going several months without any highs to speak of.
Yeah, I want to take a sort of a higher view approach here, a longer term approach, and just remind everyone, right now, the S&P 500 this year, higher by more than 25%, the Dow by 18.7%, the Nasdaq by close to 24%.
So 64th record high for the S&P 500 today.
Yeah, incredible performance.
Did you know that?
I know because yesterday I said 62 and you corrected me to 63.
Okay. So. I had to correct Taylor today, too.
Yeah, he's
I keep track of these
corrector.
things, actually.
He's got just a big calendar somewhere where just record high, check.
I'm still trying to get our countdown clock to Christmas because that's what Romaine really corrects us on every day. For our radio audiences, we do. It's the sector winners. It's the sector losers. Really interesting that in the sector losers, there is still a lot of green that really highlights some of the broad-based rally that is currently underway. Take a look, and what catches my eye at the top is it's capital goods, durables, energy, utilities. That is a bond story at play. Those are all up anywhere from 1% to 4%. How much of that is customers, consumers those companies passing on those costs to those groups. Down at the bottom, again, not a whole lot of losers, but I'll bring them to you anyways. A lot of this is banks and autos and food and staples. You sort of get a sense of that's also a little bit of a bond story as well, that reflationary trade back in vogue today, Tim.
Yeah.
I should say. Sorry.
Oh, no, go ahead.
Okay, here I go. Well, I'm going to tell you the gainers right now, and it was easy to find them on a day like today. I want to start with Airbnb. We were discussing their earnings about 24 hours ago. They reported that revenue and profit both hit a record in the third quarter. Interesting to see this company do so well in a quarter when Expedia and Booking also beat expectations, but in any case, it looks like the post-pandemic future is also bright for Airbnb. That helped shares close about 13% higher. Moving on, Pfizer, got to talk about it. One of the biggest gainers in the S&P 500, up almost 11% today. And we all know the stories. You guys talked to the CEO earlier today. Extremely promising results on its COVID-19 pill. That was enough for Pfizer's biggest one-day gain since November 2020. And going along with that news, we saw that reopening trade really roar back. Royal Caribbean was leading the charge there, up almost 9% today. That's its best day since February. Royal Caribbean now up almost 30% this year, which is actually outpacing the S&P 500 at this point.
Are you going to take this pill, Katie?
I would, honestly, if I needed it.
They've got to sign it off first.
Yeah, I mean, this hasn't been approved yet. I mean, we should have that caveat. But
in the UK, they're very quick at signing things off. They've already signed off the Merck one.
Yeah, you can take it.
And look, you make a really good point, Romaine. It's a point that we talked about a few weeks ago in the context of the Merck news, and it's a story that we're seeing play out with the decliners right now. Moderna declining today by close to 17%, more than 16%, on the concern that if this pill is available, then there is less of a reason to actually take the vaccine.
And you got Regeneron on your board up there too, down 6%.
Exactly. It's a similar story with Regeneron, the maker of those monoclonal antibodies. It's a treatment, it's a therapy.
Taking the words out of his mouth again, Romaine.
But it's a therapy, but it's more expensive than this potential treatment, so demand could go down for that. It also did get a downgrade from buy to hold earlier this morning from benchmark. Peloton, we've been talking about it all day. Look at that, finishing the day down by more than 35%. Worst day ever. Company cutting its annual revenue forecast by as much as $1 billion.
Who's your favorite Peloton instructor?
The founder and the CEO, no longer a billionaire, John Foley, $850 million net worth, roughly.
I like him.
Yeah, he's a good guy.
Yeah, he's a good guy.
Yeah.
But not a billionaire.
He's still rich, though.
He is.
A little less rich, it would seem, for the time being. I'm still using my bike, though. Let's have a little look at what's happening in terms of a cross-asset look, because I'm looking at, the dollar index on the downside today. This after we continue to look really at what's happening with the bond market. So much is being dictated by what's happening in the bond market at the moment. So the dollar falls lower as we see yields push lower in the United States as well. We get some commodity pickup in terms of the Kiwi going up on the higher side versus the US dollar. That says we get really a few of the commodities in the green today, steel up more than 4%. We saw a bid for oil, that as we wait for the response from the United States in terms of potentially some emergency reserves being pushed out, and we do see OPEC Plus not willing to bend to the will of Biden thus far. We continue to also look, though, really at what's happened across the bond market, because this is a global story, and one that we have to continue to look at. The fact that over in the UK, once again, yields absolutely crushed by the surprise move by the Bank of England. It flows over worldwide. We see German yields pushing down. We see French, Spain, 30-year off by some 8 basis points, continuing to spill over into the United States. Is this a global pushback of central banks, developed central banks, against the thesis that they were going to be raising rates anytime soon, Taylor?
It's so interesting that that's exactly what we saw. There was a hint of yields coming down on Monday and Tuesday, but it really accelerated Thursday and Friday around your BOE, Caroline, around our Federal Reserve comments on Wednesday. I want to just pull up here the 5-year. We're at a 119. We're back down to a 105. This is weekly yields, Romaine. Yeah. The 10-year yield at 156, now a 145. And the 30-year starting the week at a 196, down to a 188. So it's been this sort of recalibration, if you will, given the comments that we've gotten from the Federal Reserve. I'll just bring you one comment here, Romaine, as we think about where we are in terms of jobs day. Brain Economics saying today, really highlighting labor participation. If labor participation doesn't move, which it hasn't, we're going to be at 4% unemployment in 3 months, which puts a July rate hike back in play. Why aren't we getting stronger labor participation? That's the question.
Well, it is a good question here. I mean, you talk about the jobs data. I mean, look, it was a strong number, that headline number of 431,000 or whatever it was, but you talk about the labor force participation rate. And it seems like that we're at a stage now where you kind of see the structural changes that have taken place in our labor market. The question is, does the Fed need to react to that? That's my question.
Well, especially when you see revisions like we saw for the last couple of months, which was certainly another bright spot in the 531,000 headline that we got, beating expectations of 450. But the question is, do those jobs ever come back? There are a lot of reasons why people left the labor force. Do they need to?
I mean, there's a shift here.
There is a shift.
Yeah.
But it once again accentuates the inequality that we're seeing within it. Black women, the dropout of the labor force in terms of participation rate, we've seen the biggest dropout since April 2020. Women are slowly coming back into the workforce as schools reopen and as we hope that more pills can be taken to stop the virus spreading. But really, we're seeing inequality within races at the moment, and that is front and center for the Federal Reserve. It is something that Jay Powell cares about.
Absolutely. And I mean, Caroline, you were saying, I mean, if you look at the overall women participation rate, did tick up slightly, but there's a lot of inequality within that. And it's really interesting to see how this is playing out in the markets, because it's the jobs market, it's the jobs picture that the bond market is responding to. I mean, you've seen big flattening in the yield curve today, but the equity market, totally different picture.
And it is interesting on a day like today when we get the wage numbers as well. I think I was showing a chart earlier looking at negative real wages, that given some of those inflationary pressures, Tim, wages, despite the big gains that we've seen, are actually negative on a weekly basis.
Well, plenty to talk about next week when we see you guys for another edition of Beyond the Bell. That is going to do it for our cross.
By the way.
Oh, Taylor, where are you going? You don't have to tell me.
I'm going to take some time off.
Okay.
She's getting on a flight as well. She's in that statistic. Airlines do well. Taylor's on a flight.
All right. Have fun this weekend, everyone, especially if you are traveling. That is going to do it for our cross-platform coverage for today. We'll be back again tomorrow at the same time on Bloomberg Radio, or I should say Monday, Bloomberg Television, and on YouTube. We'll see you Monday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Katie Greifeld, what was the Ryan Dietrich statistic that I just didn't write down in time?
Oh, man, there were a lot of sevens, a lot of record highs.
So this was the 7th day in a row that there has been a record close.
Really?
Which I think has only happened one other time since 1950. I believe that was the statistic.
I have another statistics for you.
Okay.
S&P 500 posts longest streak of weekly gains since August 2020.
All right. Well, there are a lot of superlatives to think
sure.
about as we head into the weekend. In the meantime, let's head to the 1130 newsroom for a check of the latest world and national news. Here's Denise Pellegrini.
All right. Well, thank you, Tim. Yeah, we've got developments continuing on Capitol Hill this hour, because we do have developments with the House voting, as you can hear there. And the House is voting as I speak on whether to consider President Biden's social spending bill. Let's listen in.
For what purpose does the gentleman from Pennsylvania rise?
Madam Speaker, as a member designated by Congressman Mark Green of Tennessee pursuant to House Res 8, I inform the House that Congressman Mark Green will vote no on the question of consideration of the rule. Thank you.
For what purpose is the gentlelady from Connecticut?
As the member designated by Ms. Wilson, I inform the House that Ms. Wilson will vote yes on consideration of the resolution.
All right, so that's where we stand right now. The House is voting on whether to consider President Biden's massive social spending bill. This is H.R. 5377. And right now, let's see the vote total. Yeas, 145, nays, 194 now, with apparently one Democrat voting no so far. Friends, family, and dignitaries eulogizing former Secretary of State and retired military Army General Colin Powell in Washington today.
One can say this man used to the limit the powers that God granted him. He was worthy of love and respect.
And those are the words of former Deputy Secretary of State Richard Armitage, who served under Powell, speaking at that National Cathedral service. I'm Denise Pellegrini. This is Bloomberg.
Thank you so much for that update, Denise Pellegrini. Tim Stanivek and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Big sigh, Katie, when I saw this morning. I actually didn't see it when the news, quote unquote, broke, when the fake press release crossed Cision's newswire, but I saw the aftermath. We're talking, of course, about Kroger and Cision probing the crypto hoax after a fake news on Bitcoin Cash.
Yeah, and you did so Bitcoin Cash, it's not Bitcoin, it's an offshoot of the world's largest cryptocurrency. You did see the price of that spike briefly, 5%. This isn't the first time we've seen something like this. I mean, it feels like a month or two ago, there was a fake press release that Walmart was going to accept Litecoin. That one took a lot longer to unravel.
It did, and in fact, the interesting part about this is that it was less sophisticated than what we saw today. So you're talking about what happened in September when a fake statement went out on a separate wire service, Globe Newswire, which is saying that the retail giant would begin accepting the cryptocurrency Litecoin. The fake news release set off a short-lived surge of more than 30% in Litecoin before Walmart said the information was false and the statement was taken down. But the scam today was that it actually went to Kroger's investor relations website because it automatically picked up the release.
Yeah.
So you could actually find this press release on the investor relations website, which added credibility to it.
Which is scary, you know.
It is scary.
And we're talking about, cryptocurrencies here. But people's money is tied up in that. Even Bitcoin Cash, not a lot of people are familiar with that. And I mean, it's not new to see fabricated press releases, but it seems like the cryptocurrency universe in particular seems to be vulnerable to this type of deception. And I mean, just the past few months alone would seem to prove that.
Look, I don't want to speculate here, but you have to wonder about the motivations behind something like this. If it's not as much of a joke as it's more about actually pushing the price of something higher for financial gain.
You have to be quick, though. I mean, Bitcoin Cash, it spiked, and then it just as quickly came down.
Yeah, we're going to have much more on crypto in just a few minutes with Michael Sonnenschein. Real crypto, though. You're listening to Bloomberg Radio, and this is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story headline from the Bloomberg Professional Service. Peloton Interactive has halted hiring across all departments effective immediately. This according to CNBC, which did not say how it obtained the information. And the Cuomo prosecutor is asking the judge to delay Cuomo's groping case. This according to the Associated Press. It was a day of records on Wall Street. The Dow, the S&P, NASDAQ 100 index, Russell 2000, all climbing to records. 10-year yield right now, 1.45%. A rally in companies that stand to benefit the most from an economic rebound drove stocks higher after solid jobs data and encouraging results from Pfizer's COVID-19 pill study. Pfizer shares surged today by 10.9%. S&P was up 17, up 0.4%. The Dow up 203, up 0.6%. NASDAQ advanced 31, up 0.2%. NASDAQ 100 index up 0.1%. Russell 2000 up by 1.4%. To be clear, the Dow, the S&P, NASDAQ 100, Russell 2000, all at records. Spot gold up 1.4%, 18.16 the ounce. West Texas Intermediate crude up 3.2% today, and Bitcoin slumping 0.8%, 60,879 on Bitcoin. Briefly after earnings, big numbers. Peloton plunging today by 36.4%, Expedia up 15.6%, Airbnb up 13%, Shake Shack surging 16.5%. And that's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, it's time now for our weekly crypto update brought to you by Interactive Brokers. Trade crypto for less coin with commissions just 12 to 18 basis points and no hidden spreads or markups. Learn more at ibkr.com/crypto.
Well, Tim, we've been talking about crypto all week, so it's been a good week for me. And I'm excited to keep that conversation going with Michael Sonnenschein. He is the Chief Executive Officer of digital asset manager Grayscale. He joins us now on the phone from Los Angeles. Michael, great to have you on the show. And I mean, it's been a big week for Bitcoin, but it's been an even bigger week for Ethereum. Ether is up 3.3% this week, dusting Bitcoin. And I feel like we've been seeing this more, that we see Ether outperform Bitcoin. Are we back in alt season?
Well, first of all, great to be with you both, and thank you so much for having me. You know, I think it's tough to say whether or not we're back in alt season or not. I think what we're seeing now is more attention than ever is being paid to crypto as an asset class. There is certainly amongst the Grayscale investors a general appreciation that the asset class is here to stay. And as a result of that, investors realize that there is a lot more than just Bitcoin, and actually more than just Bitcoin and Ethereum. And so there continues to be ever more demand for them to diversify beyond just those top two digital currencies by market cap.
Okay, where else should they diversify?
Well, I think what many investors are beginning to appreciate is that there are now growing ecosystems within the digital asset universe. And, you know, we're seeing that in the worlds of gaming. You know, there's been a lot of chatter recently about the metaverse. We've seen the convergence of file storage and digital assets. We've seen a lot of investors beginning to think about things like NFTs and really starting to unlock other use cases that maybe weren't part of this ecosystem when they first began thinking about making investment allocations.
Okay, you really piqued my interest with NFTs. There's so much to talk about. We fortunately have you for quite a bit, Michael, so we're going to try to get to everything, okay? But let's talk NFTs, because I'm trying to understand what use cases are for NFTs beyond what we've seen them used for, which, you know, is collectibles.
Sure. Well, I think what it's highlighting, and this is just one incarnation of the idea of a digitally unique item that the ownership of which is you know, verifiably recorded in a way that's completely decentralized. You are starting to see how that could certainly be a tailwind or a major improvement to individuals and companies around the world. You know, we fight things like, you know, fake goods whether they're counterfeit or, having to be able to track them and their whereabouts and track their ownership. And, art is just, one vertical that it could be looked at. It could be luxury goods. This can extend, really to almost any item, physical or not, that could be tagged and added to a blockchain where its ownership could easily be recorded. And I think it's really starting for many people to really have them rethink the creator economy, the way that artists can pump out their content and actually sell it and engage directly with their fans and user bases. And that could be music, it could be art. I mean, the list is pretty endless.
And so sticking with NFTs, I mean, Grayscale has a really impressive lineup of funds. It feels like you guys cover every part of the cryptocurrency universe. I don't see any of your trusts specifically focused on getting exposure to NFTs. Is that something that you plan to offer at some point?
Well, I would never rule anything out. We today operate 15 different investment vehicles. Some of them are single asset vehicles and some of them are diversified, meaning that they have a basket of various assets that they hold. And so as we think about where investor preferences are, we certainly think that there is a meaningful opportunity to expand in both categories, such that we are providing investors with an on-ramp to certain of these subsets of the digital currency ecosystem. And we've so far done that with large cap currencies. We've done that for DeFi, and certainly are always trying to toe the line between identifying opportunities that we think are compelling and bringing them to investors, and trying to reconcile that with where investors are telling us they want that exposure.
Well, listening to that, I'm curious whether you think that NFTs could be a flash in the pan, whether this is just the bright, shiny object that crypto investors are focusing on right now, because there are stats out there that, obviously NFTs get a lot of buzz, but actually daily average sales peaked sometime in August, and we have just about 30 seconds.
Well, I don't know that it's necessarily a flash in the pan so much as, again, I'd reiterate that the success and the acceptance of NFTs, I think, is really a way for everyone to understand the potential of what it could be like to have assets whose ownership is tracked on a blockchain. NFTs are just one incarnation of them.
Michael Sonnenschein is Chief Executive Officer at Grayscale. Michael, stick with us because we're going to do some news. Then we're going to come back and chat more about crypto, blockchain, NFTs, all that and more. Curious really about asking him where he thinks crypto is right now in the scheme of asset classes, like where it is in development. And also, what do you say to people who's like, okay, well, it's risen too much. Am I going to be able to get in on this and still get good returns?
Also, the metaverse.
Yeah,
haven't even touched it yet.
No. All right, we're going to go to the metaverse when we come back. All that and more in just a few minutes. This is Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld live on this Friday afternoon from the Bloomberg Interactive Broker Studio in New York. In just a few minutes, we are going to be speaking once again to Michael Sonnenschein. He's CEO of Grayscale. We're going to talk about the metaverse, Katie.
Yeah, I'm hoping he can make me feel a little bit better. I don't know. Whenever I talk about the metaverse, it's like, what's real?
Are you metaverse curious?
I'm metaverse curious, crypto curious. Seems to be a link between the two.
Okay, we're going to talk about that in just a few minutes. In the meantime, a check of everything that's happening with the business world. Here's Charlie Pellet.
Hi, thank you very much, Tim. And here's what's going on. Records on Wall Street. We head into the weekend with the S&P at 4697, up 17 points today, up by 0.4%. But a lot of people this weekend will be talking about the year-to-date numbers. So far this year, the S&P up by 25%. Let's put that in context. The Dow, by comparison, up 18.6%. NASDAQ up 23.9%. To be sure, records for the Dow, the S&P, NASDAQ 100 index, and the Russell 2000. S&P up for a 7th day in a row, closing out its longest streak of weekly gains since August of 2020, after October's jobs report beat economists' expectations. Ryan Dietrich has been tracking the numbers. He is senior market strategist at LPL Financial. He was our guest right here on Bloomberg Business Week.
This is the second time this year we've had a 7-day all-time high win streak. I just was looking. These years might sound familiar to the Bulls. 1955, 64, 65, 95, and 97 are the only other years in history that have seen two separate 7-day win streaks that all were at all-time highs.
So today we had jobs data and also news out of Pfizer helping lift stocks. S&P up 17, up 0.4%. The Dow up 203, up 0.6%. NASDAQ up 31, up 0.2. 10-year yield 1.45%. Spot gold up 1.4%, 18.17 the ounce. West Texas Intermediate crude up 3.3%. Bitcoin lower today by 0.8%, 60,873. Cannot ignore the Russell 2000 surging 1.4% today. NASDAQ 100 index up by 0.1%. Briefly, Pfizer says its COVID-19 pill did reduce hospitalizations and deaths in high-risk patients by 89%. Pfizer shares up today by 10.9%. After earnings, Peloton Interactive plunged 35.4%. Shake Shack shares surged today. Shake Shack up by 16.5% after earnings. I'm Charlie Pellet. That is your Bloomberg Business Flash.
Thank you very much, Charlie Pellet. Still with us is Michael Sonnenschein. He is the Chief Executive Officer of Grayscale, on the phone from Los Angeles. And Michael, it's finally time to talk about the metaverse. And clearly, there's a lot of corporations out there that are excited about it. Facebook rebranding as Meta platforms. But there's also a lot of people excited on Twitter in my mentions about the metaverse. But for the normal person, how do you make money on the coming metaverse revolution? How do you even invest along that?
All right. Well, let's break it down for everybody. So simply put, Katie, the metaverse is where digital experiences can take place, right? And so how did we get here? When we think about the internet, it really started with the internet 1.0, right? That meant that we had now a digital place where we could extract information. It was really read-only. And over the last, 2+ decades, we've seen the internet evolve into the Web 2.0, where we now have this digital economy. Individuals and companies can read and engage with each other, but all of the data, all of the activity is owned by corporations, right? We must buy online goods through certain sellers. We must interact with one another through certain social media platforms, et cetera. And now what we're seeing is the emergence of the Web 3.0, the metaverse being one of those incarnations, where digital experiences are actually owned by the individuals that are participating. So the value no longer attributes to the company, but rather to the individuals that are participating. So one of the areas of the metaverse that we've been excited about is actually a project called a decentralized metaverse where users can interact with one another, build businesses, have experiences, and there's actually a native token called Mana that's associated with the metaverse Decentraland.
Hey, Michael, wait, we lost you for 1 second. Just explain one more, like 10 seconds ago, what it's called.
Yeah, it's called Decentraland, and Decentraland is one of these decentralized metaverse projects where users can interact with one another and participate in the economy there by building businesses, offering experiences, and there's actually a native token associated with it called Mana.
We don't have a ton of time, so I want to make sure we get all this in. What is an experience that somebody would have in the metaverse that they can't have in real life?
You can go to a concert, for example, and you wouldn't need to leave your couch or your desk. If you want to see a certain artist perform and they're not where you live locally, you might be able to attend that concert in the metaverse. And that's just beginning to unlock the types of experiences that are possible. And it's bringing together a bunch of technologies, digital currencies, computing, gaming, and virtual reality. And we're just at the earliest of earliest innings. And so a lot of their digital currencies today, like Mana and others, are ways, to Katie's point, that investors can invest in the metaverse as this technology or as these experiences begin to take off.
And Michael, talk about the link between cryptocurrencies and the metaverse, because it seems like there's a lot of spiritual similarities there. A lot of the people who I talk to who are excited about crypto or excited about the metaverse. Is that because, in this new virtual reality, that will be the medium of exchange, or is it something different?
Well, I think it's because these are decentralized communities that the value that is typically ascribed back to the companies, social media platforms, e-commerce platforms that we use in the Web 2.0 can actually be owned and used by the individuals participating in the metaverse. So many of these projects have their own native digital currencies that are, either offshoots of things like Bitcoin or Ethereum or others that can actually be only used in those ecosystems.
Michael, just in 10 seconds. Well, I can't even ask you a question the question that I had would require a longer answer. You're going to have to come back and join us once again, Michael.
I'm always happy to come back.
Okay.
Hopefully that helps everybody understand the metaverse a little bit better.
It absolutely helps. We are, Katie, are you still metaverse curious? Where are you?
I still have some existential dread associated with the metaverse, but I'm moving past it. This conversation helped.
Metaverse hesitant?
Metaverse hesitant.
Okay.
Open to it.
Plenty of time. Web 3.0. Great definitions of that, by the way. That was really helpful. Michael Sonnenschein, CEO of Grayscale, joining us once again on the phone from Los Angeles. Thank you so much for taking the time, Michael. Well, let's now get a check of the latest world and national news. Standing by to help us do just that is Denise Pellegrini. She's live in our newsroom here in New York.
Hey, Tim, thank you. Well, we do have more developments on Capitol Hill to tell you about. House Speaker Nancy Pelosi speaking at this moment on Capitol Hill about President Biden's Build Back Better spending plan. Let's listen in.
We had hoped to be able to bring both bills to the floor today. Some members want more clarification or validation of numbers that have been put forth, that it's top line, that it is fully paid for, and we honor that request. So today, we hope to pass the BIF and also the rule on Build Back Better with the idea that before Thanksgiving, it should take another week or so to get the numbers that they're requesting.
All right, there you heard it from House Speaker Nancy Pelosi. Democrats now hoping to pass President Biden's massive spending plan by Thanksgiving after getting clarification on the numbers that some members are asking for. Prosecutor investigating accusations that former New York Governor Andrew Cuomo groped a woman has asked a judge for more time now. The prosecutor says the criminal complaint filed last week by the local sheriff was, quote, potentially defective. Another possible treatment for those who do catch coronavirus, Pfizer is reporting strong results for its COVID-19 pill. It stopped trials and is applying for emergency use authorization. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Denise Pellegrini, and we're also watching that case with Texas, Florida, Missouri, and other states with Republican attorneys general suing to block the Biden administration's COVID-19 vaccine mandate. This is Bloomberg.
Thank you so much for that update, Denise Pellegrini. We've been watching Zillow this week, Katie, as we learned that the company was pulling the plug on its iBuying program, that program that would use Zillow's algorithm to make offers to people's homes so the company could then buy them and resell them.
Yeah, because Zillow wasn't the only one doing this. I mean, some of its competitors include Opendoor and OfferPad. They all use tech-powered algorithms to buy houses, and now they're left to kind of defend that practice. And they're saying that it's not the business model, it's the execution. It's easy to buy homes. That's the easiest part. It's the renovating and selling in 100 days. That's the key to doing this successfully.
Yeah, great story by Bloomberg's Patrick Clark. Check it out on the Bloomberg terminal. He writes that Zillow holds a lot of sway in the U.S. real estate industry, serving as a fixation for consumers and competitors. So when the company announced plans to abandon that home flipping business and also fire 25% of its workforce, it brought new scrutiny to the so-called iBuying industry. So as Katie mentioned, they use tech to buy and sell homes. They pitch consumers on speed and convenience to ease headaches when it comes to the housing market here in the States. Shares of both companies, though, slid this week as Zillow's troubles rattled investors, though they rallied Thursday to erase much of those losses.
Yeah, and I mean, with Zillow out of this business, I mean, you have CEO Eric Wu from Opendoor saying that this is an opportunity, and they actually pioneered this iBuying model, and now they're hoping to retake the market leadership that they had now that the best-known brand doing it is out.
Yeah, he told Bloomberg News, quote, "We're going to lead the charge in this transition from offline to online." He said that Opendoor has invested heavily to build expertise in home pricing and getting renovations done in a timely, cost-efficient manner. Those challenges contributed to Zillow's iBuying demise. I think back to what we talked about with Dallas Tanner yesterday. I asked him, he's the CEO of Invitation Homes. He joined us and he said it wasn't any sort of sign of any sort of weakness in the housing industry around the country. This was more so isolated to Zillow and didn't illustrate anything bigger. Check out this story on the Bloomberg terminal. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A rally in companies that stand to benefit the most from an economic rebound drove stocks higher after solid jobs data and encouraging results from Pfizer's COVID-19 pill study. Today we had Pfizer advancing by 10.9%. Among some of the airline stocks that were moving higher today, UAL up 7.3%, American up 5.8%, Delta flying higher up by 8% today, and Southwest was up by 6.4%. Cruise stocks also rallied. Carnival Corp, for example, up 8.4%, Royal Caribbean up 9%, Norwegian Cruise Line Holdings up today by 7.3%. Travel and leisure stocks have been hurt for months by fears of the Delta variant. Today, the S&P rallied to a record, ending the week heading into the weekend at 4697, up 17, up 0.4%. The Dow up 203, up 0.6%. Nasdaq up 31, up 0.2. 10-year yield 1.45%. Spot gold up 1.5%, 18.18 the ounce. West Texas Intermediate crude up 3.2%, 81.34 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, a survey this year from Google found that of U.S. full-time information workers, 74% of companies intend to shift some employees to remote work permanently. 83% of executives expect to support some level of hybrid or all remote work. So the big question we've been grappling with, Katie, has been, to what extent does the remote work continue after the pandemic? And here to help us talk about how teams can stick together when they are working remotely is Javier Soltero, General Manager and Vice President at Google Workspace. He joins us via Zoom from San Francisco. Javier, how are you?
I'm doing great. How are you?
Doing well, thanks. So for people who aren't familiar with Google Workspace, it's all of the Google suite of products that Google offers for enterprises, right? Google.
That's right. Actually,
yeah, go ahead.
Yeah, it's the set of Google products that Google offers for collaboration and communication and productivity, but it is actually both what is offered for enterprises as well as what is offered to consumers as part of some work we did last year to kind of recognize the opportunity to have these products be viewed as part of a single platform that actually delivers value to billions of people across both of those spectrums.
Well, it's so appropriate because I think the way that work takes our lives right now, it's not something that is just done at the office or if people who work remotely just done at home or just done the hours between 9 and 5, Javier. So I'm wondering what you've learned in the last couple of years about how employers can help their employees navigate this new normal.
Look, I think it's like all good big shifts in business, something that is playing out sort of in real time in front of us, and where there's a fair bit of uncertainty and actually more than quite a bit of opportunity. Really, the main lessons boil down to three things. The first thing, as you mentioned, work is no longer defined by the location that it occurs in, and that opens up a lot of opportunity, but it presents a set of challenges both for the individuals as well as for the organizations that are part of it. Second, the most precious resource that individuals have and that organizations, again, need to track is the time and attention of the people participating in work, and particularly because of the earlier point I made about the flexibility you have to work from various locations implies that your life now becomes far more blended. And your ability to manage your time and your attention, especially as you meet competing demands, very important. Last, the most essential ingredient, in tackling any worthwhile endeavor as a human race is a sense of connection that we establish amongst each other. And as I think many of us have learned over the last 18 months, nurturing trust and connection between people, especially people who may not have had that connection before we all sort of shifted to a fully remote experience, is very difficult and remains an essential part of doing everything from teaching kids how to read to like launching spacecraft into orbit. And so the ideal approach to hybrid work embraces the reality of those three things and provides a good solution for them.
So with this shift to hybrid work, this shift really digital and to the cloud, I'm curious to hear how Google Workspace protects against cyber attacks, really. Because if you think about the past year, there's been so many high-profile attacks. So what does the cybersecurity around your product look like?
Well, we're very proud, I guess, of the investments that we've been making and the progress we've made to help address the concerns in security that are showing up in all kinds of companies, large and small, across the world. A lot of these problems originate in part because of our technical approaches and product approaches, as well as habits that people had that predate the realization about embracing digital work and real-time collaboration. Lucky for us at Google, we were born in the cloud, so we were born in an era that actually allowed us to take a fully different approach to a sort of collaboration-first model for building everything from the way in which people author documents or spreadsheets and presentations to the way in which people use multiple types of communication, from email to chat to video calling, and put all of that together in a manner that doesn't trade off the security of the solution from its effectiveness. A lot of this is also underpinned by something we call zero trust computing, which is, again, a technical approach that says, look, you need to have people be able to work from wherever they are on whatever device they may be able to use, without compromising on the ability that an organization has to secure its information, its content, and its systems from possible bad actors. And we're doing, I think, a really, really good job in that regard.
I think people would recognize you, Javier, as the former CEO and co-founder of the platform Acompli that Microsoft bought. Wow, it was back in 2014, is that right? For $200 million. It doesn't seem like it was that long ago. What's that?
Yeah, it feels like the before times.
It
right?
does, yeah. No, I remember that acquisition. I'm wondering what your experience building a company from the ground up, like you did at Acompli, and then integrating it at a company like Microsoft, has taught you about working at scale at Google.
Look, I think two major things to extract from that. First is this sense that in the world that we live in now, technology is all around us. It's a relatively familiar and approachable thing for people in across their personal and their work life. And as a result, we have to build products that have a point of view and can help people make choices around what they really prefer to use, as opposed to just relying on the assumption that you need a computer, or here's the computer because you don't know anything about computers, so I'll pick for you. So building products that adhere to a much more sophisticated and taste-driven approach to technology, both in personal lives and in the workplace, is something that we instilled as a value into Acompli and carried forward into the rest of our journey. And then the second part, I think, is that I was lucky enough to be a part of a very interesting period of time at Microsoft where there was a lot of change going on in the organization. And I think that was instructive in how you can be a catalyst for change or a participant in that change, both at the level of which, what products are you building, but also even in the approach that you take to managing a workforce and running large teams. The pandemic, in the past 18 months have shown us that we need to be really flexible in our approach and know that we don't know everything that is ahead of us. And so, yeah, I think those two things help quite a bit.
Yeah, the flexibility, the key to absolutely staying sane during these challenging times. Javier Soltero, General Manager and Vice President at Google Workspace, joining us on Zoom from San Francisco. Javier, have a great weekend, and thank you so much for joining us on Bloomberg Business Week. Katie, time flies.
Time flies. We got a lot done. We talked about jobs, dogs, the metaverse. It was huge.
It was huge. Thank you so much for filling in for Carol this week.
Thanks for letting me hang out.
Yeah, anytime. Well, don't miss Sound On, because in just a couple of minutes, Joe Matthew is live from Washington, D.C., and there is a lot happening from there. For the entire Business Week team, I'm Tim Stennebeck. This is Bloomberg.